Hi, today we're going to look at worksheet 7.6, partial budgeting, and I'm going to go through the first part of this assignment, the example, with you. We have been covering in previous assignments enterprise budgets. Today with the assignment 7.6 on partial budgeting, we're looking at a little bit different scenario. In partial budgeting, we are asking ourselves which enterprise to be taking part in. It's kind of like making a decision and you're putting on one half of a sheet of paper all the positives from making the decision, and on the other side of the piece of paper you are writing all the negatives. So, let's go through this example and hopefully it'll make sense to you. The decision to participate in a government farm program can be analyzed with a partial budget. Assume that a cotton grower wants to know if participation would increase their profit. We're going to assume that it requires not planting 10% of the normal cotton acreage. In return for the grower is a guaranteed price of 70 cents a pound on 60% of their normal acres. The government pays the grower the difference between 70 cents and the average market price on these acres. Let's use the following information to develop a partial budget for this decision. So this grower produces 500 acres of cotton in a normal year without participating in this program. Their yield is 600 pounds an acre, and the market price is estimated at 64 cents a pound. If we participate in the government program, we only plant 450 acres of cotton, which means we have 50 acres that are idle. We still produce 600 pounds an acre on the remaining acres, and we expect to earn a price of 64 cents. So here's the information that we are given. Participating in the program will result in a government cash payment of 300 acres, or 60% of our normal production. 60% of 500 is 300, times 600 pounds an acre times 6 cents, or the difference of 70 cents and 64 cents. Remember, the government pays the grower the difference between 70 cents and the average market price. Well, the average market price is 64 cents. They're guaranteeing us 70 cents. So the government's going to pay us 6 cents on 300 acres of 600 pound cotton. That ends up being a price of $10,000. By not planting the 50 acres, the grower will save the following expenses: seed, fertilizer, machinery, labor, harvest, and hauling. These are all costs per acre. And we will have the added expense of the following acres: seed, machinery, and labor. Even though we're taking those lands out of cotton, we're going to be putting them into, it looks like grass of some sort. And so we're going to seed that grass, and there's the expenses with that. So let's go ahead and look at a partial budget. First of all, here's how a partial budget is organized. It's additional cost and reduced revenue on one side. In other words, those are the negatives for making the switch from one enterprise to the next. We have the additional cost of making the switch, and we have the reduced revenue. The positives of making the switch are the additional revenue and reduced cost. So let's take a look. Our additional cost, again, our additional costs were the added expense on the 50 idled acres right here. $7.50, $11, and $8 per acre. That ends up being $26.50 per acre. Times 50 acres on the idled land gives us $1,325. That's an additional total additional cost. The next negative, the 50 acres that are not in production. We're not going to be able to sell the cotton from those 50 acres. Remember now, we have 50, because we're in the government program, we have 50 idle acres. We had to spend $1,325 to put those 50 acres into grass, and we have to give up the production from those 50 acres. So the 50 acres that's now out of production times 64 cents a pound price times 600 pounds of cotton, that's $19,000 we're giving up of total income. We would have had that $19,000 of income if we were not in the program. So we add the 1325 plus 19,200. That gives us $20,525. That's the total negative by participating in the government program. $20,525. Again, let's review. It's the added cost of participating in the program, and it's the loss of income from the 50 acres. Reduced revenue. Now, what are the positives to going in this program? I'm just going to put negatives up here to remind us. These are all the negatives. Over here are the positives. The minuses and the pluses. Okay, additional revenue. That was up here. Participating in the program will result in a government cash payment. We figured that out to be $10,800. So that's a positive. We call that additional revenue, $10,800. Reduced costs, that's the money we're going to, so that's a positive up here, by the way. Remember, it's a positive. Another positive is we save all the money we would have spent on planting the 50 acres of cotton. All this expense we would have spent on planting the 50 acres of cotton, we now get to save. So here I add up all those costs per acre, multiply that by 50 acres to get a total savings of $12,175. So we get an additional $10,800 from the government by participating in the program. We reduce our cost by $12,175. When we add the two benefits together, we end up with $22,975. So the pluses outweighs the minuses. We have more positives than negatives. How much? $2,450 more positives. Our net change in net income of $2,450. So in this case, yes, we are going to participate in the government program. And that's the first question. Would you recommend the cotton grower participate in the government program? Yes, because the producer will earn $2,450 more dollars by switching to this program. Other than dollar advantage, what other reasons might you give for participating in the program? Well, there's less risk by participating in the government program. We're not worried about yield risk or price risk, anything like this. Also, hopefully we're helping the overall industry by reducing the amount of cotton produced. And that's the point of the program. 3. Should a land charge be included in the budget? Why or why not? No, it shouldn't. Land's a fixed cost. So either way, whether we participate in this program or not, we still incur the cost. It's a fixed cost. It's neither a plus nor a minus to either side because we're going to have the cost no matter what. And same with the next question. Why were no machinery costs shown on any place in the partial budget? Same way. It's a fixed cost. In either case, the fixed machinery cost is going to be incurred. So, the scenario that you're going to do on your own is Rhonda Rancher running 230 stocker steers, which are purchased in the spring, run on pasture in the summer, and sold in the fall. Rhonda is thinking about switching to a cow-calf operation with 100 beef cows, replacing 230 stocker steers. Use the following information to complete a partial budget. So, we need to figure out which are pluses, which are minuses. Additional costs are all minuses, additional revenue are all, and reduced costs are pluses. The return are 675 pound steer at 80 cents. So we're going to sell 226 head. $540 a steer times 226 steers. The cost will incur on all 230 head is what we're going to figure. We don't know when the 4 steers are going to die. So we add up all these costs, multiply it by 230 head. If we go from steers to beef cows, the returns from the steers is a reduced revenue. We're not going to have this revenue anymore. So that's a negative. That goes here. Reduced revenue. Reduced costs, we're losing the cost from those steers, so that's going to go here. That's a positive. We no longer have the cost of these stocker cattle. We no longer have these. For the beef cow-calf operation, we have 80 calves that we're going to sell at $391 a head, and we're going to sell some cull cows. So that's an additional revenue. That's a positive. Additional revenue. It's a positive. Reduced costs, or excuse me, increased costs are the new costs of the beef cows. You don't need the $100 or the $900 per cost. That's not an annual cost. So we're just going to add up the annual cost of these this beef cow operation. That's going to be additional costs right here. Then answer the following questions. So I hope I was of some benefit to you today in figuring out assignment 7.6 partial budgeting. As always, if you have any questions, please feel free to give me a call, drop me an email, or stop by my office, and I'll do my very best to answer any questions. Good luck.